Buckle up, folks. The U.S. economy just flexed its muscles with a stronger than expected rebound in the second quarter, proving it's far from down for the count. If you're wondering why this matters, stick around. We're about to dive into the details that could reshape how you view economic recovery. But here's where it gets controversial. Was this surge a genuine sign of resilience, or just a temporary high fueled by questionable policies? Let's unpack it all, step by step, making sure even beginners can follow along without getting lost in the jargon. Coming from Washington, the latest buzz is that the U.S. economy's performance in the second quarter has been revised upward once more, painting a picture of an economy that's bouncing back with impressive vigor. Economists are now predicting that this momentum likely rolled right into the third quarter, highlighting the remarkable staying power of the world's biggest economic powerhouse. For those new to this, think of it like a runner who stumbled, but then sprinted ahead. It's all about that comeback story. At the heart of this update is Gross Domestic Product, GDP, which is essentially the total value of all goods and services produced within the country over a specific period. It's like the ultimate scorecard for economic health. According to the Commerce Department's third and final estimate released on Thursday, GDP climbed at an annualized rate of 3.8% from April through June. To put that in perspective, annualized means we're looking at the growth as if it happened over a full year, which helps compare quarters fairly. This 3.8% figure is notably stronger than the 3.3% reported in the second estimate, and leaps well beyond the initial 3% reading. Imagine planning a budget and suddenly finding out your income is higher than expected. That's the kind of positive surprise we're talking about here. What powered this economic boost? A couple of key factors played starring roles. First, there was a noticeable drop in imports, which actually helped GDP by reducing the outflow of money from the economy. Second, American consumers kept their wallets open, continuing to spend on everything from everyday groceries to big-ticket items like cars or vacations. This sustained spending acted like a steady engine, driving growth forward. To clarify for beginners, consumer spending is a huge chunk of GDP. It's what happens when people buy stuff, creating jobs, and keeping businesses humming. This all came after a rough start to the year when the economy contracted in the first quarter. Back then, importers had stockpiled inventories in anticipation of President Donald Trump's tariffs, which are extra taxes on imported goods meant to protect domestic industries. But here's the part most people miss. Those tariffs ended up subtracting from GDP growth because they increased costs and disrupted supply chains, leading to that initial dip. It's a classic example of how trade policies can have ripple effects, like throwing a stone into a pond and watching the waves spread. Looking ahead, the Federal Reserve Bank of Atlanta is forecasting that GDP kept up its strong pace into the third quarter, suggesting the economy didn't just recover, it accelerated. For context, this is based on their models that track real-time data, giving us an early peek at trends. The government's official first estimate for third quarter GDP is set to drop next month, so stay tuned for more updates. This ongoing story is still unfolding, and we'll keep you posted as new details emerge. Now, let's stir the pot a bit. While this growth sounds fantastic, some experts argue it might be masking underlying issues like income inequality or reliance on consumer debt. Is this really a sustainable win, or could it be setting us up for future bumps? And this is the part that sparks debate. Do tariffs ultimately help or hurt the economy in the long run? We've seen both sides. Supporters say they protect jobs, but critics point to higher prices for consumers. What do you think? Is this economic resilience a cause for celebration, or should we be bracing for turbulence? Share your opinions in the comments below. I'd love to hear your take.